To the March 11th, 2019 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman and president, McGowan Group. We'll start this week, as usual, with the Dow Jones Industrial Average to get a read on the markets. What's the read this week? The Dow wilted, and what we see here is a decline to about 25,300 at the lows of the week. See the bounce back here, and then wilting since our last report together. The 5-year chart shows a few things. Notice this range-bound period, 2014, 15, and 16 until the election, and then we had a nice 40% rally or so. And we appear to be range-bound, very similar to 2014 after the markets had bounced back, but notice range-bound. This was a decline in profitability, or concurrent with the decline in profitability for the S&P 500. Declined from about 110, 115 annualized to about 105. Plus we had the flash crash and a lot of worry about Greece and Europe that everybody's kind of forgotten about. But this week, Europe emerges with its mushy economy again. The ECB says growth is not going to be 1.7%. Growth is actually going to be 1.1. So they got 1% growth in Europe. That was the first smackdown in the Dow. Then we came out with a 4% Chinese decline in their equity markets right at the end of the week. They reported over 20% drop in exports, which is their big dependency. So, range bound, and this week's program titled Boring, the forecast, Boring with Scattered Surprises for the rest of the year. All right, let's take a look. We've got the dollar index. We went back to 2014. There was lots of talk that the dollar would become worthless and it was going to be the end of America because the Fed printed too much money. Not so much. Boom. This is the value of the dollar relative to a basket of currencies, including Europe, but also trade-weighted the other currencies. You can see it peaked at about 105. The worry in 2016 was that the dollar was too strong and we couldn't sell our stuff at a reasonable price to make dollars. Declined all the way to 90, now about 97. So the dollar in a relatively strong trend. That's consistent with lower inflation. Here we go versus the euro. The euro slowdown was concurrent with about $1.12. 2014 and before. The euro actually hit a high of about $1.60. That was a very bad time to go to Europe because it's already expensive, but that made it really expensive. So a better time to go to Europe, $1.12. What does it mean for us? The dollar's still king, and the worries about inflation have subsided in favor of slowing global growth is now the concern, and that means pretty much zero inflation. What are the solutions? We'll talk about it at NetWorthRadio.com, where we highlight this week 2 asset classes, global high yield and energy infrastructure. Not without price risk, but with a nice current yield, so that if things are range bound, you get paid to wait. We'll go in depth in the next couple of charts here. So that's the 5-year chart on the euro, and it doesn't look pretty on its current trend. These are the interest rates around the world. What's notable here? Negative interest rates. The ECB said, hey, we're going to print lots more money. We're going to give free money to the banks, essentially. And notice, if you buy European bonds, 2-year, 5-year, a lot of those are negative yields. You get back less at the end than what you put in. That doesn't sound good. Now contrast that with the global high yield market, more the B credit market, and you've got much higher yields relative to the 2-year Treasury at 2.5. Notice that yield doesn't rise very much for a 10-year Treasury, 2.64, and the 30-year stable this week at 3.03%. But here's a question for everybody. Do you want to loan money here, if we're looking at France, do you want to loan money to France at 0.4%, or do you want to pay France to hold your money at 0.5% a year? That's not much yield. Italy, they were the poster child of insolvency just a few years ago, and you can get more in a treasury than you can in the Italian government bonds. What that says is treasuries at this yield are a pretty good global bargain, and the period of really low interest rates may not be over. Certainly it's not over in this chart where you can loan money to Greece for 3.2%. No, thank you. Okay, here we go. This is oil and pipelines. Notice the correlation here. What we do see here on this chart, the colorful chart, are the pipelines. They're still half price. Oil coming in this week, that's on that side. The burnt orange chart, appropriately enough, because the University of Texas has a lot of oil. And so that's $60 barrel oil kind of cuts in here. We're about 55 at the close this week. The pipelines still have a ways to go if they're going to correlate to oil as usual, but they don't have to because those are toll booths. And that asset class could be one of the better bargains. This chart shows it at half price, and we've got good yields, and we get more in depth at each program at networthradio.com. I'm Spencer McGowan, your financial weatherman, and we'll be back next week with your report on the global financial markets. Education, be sure to subscribe, because when there's fast-breaking market news, we're going to bring it back to you and discuss investment strategy each time the weather conditions change. Thank you for joining us. My firm, McGowan Group Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at networthradio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of networthradio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.